All right, now we're going to be talking about wedges and triangle patterns. Let's start with the wedges. Now there's two types of wedges. If it's going to be pointing upward, okay, it's going to be called a rising wedge. And if you're going to see it pointing downwards, it's going to be called a falling wedge. So let's start with the rising one. So as we draw a trend line here, those 2 points, it's 2 highs, and then the lows. So we're using the closing here. Okay. So see what happens. You need at least 2 points to draw a trend line. Now, sometimes within the pattern, you're going to see 3 hits or 3 touches of a trend line. Okay, this one did only 2, so we didn't get a third. Here we got 1, and we got a 2, and then actually a third one just broke down. Okay, so this one's a reversal pattern. So as we're going up in an uptrend, we're going to see right here, an uptrend here. So we're going to see a sharp decline after we break this pattern. Now, usually when the pattern is broken, you're going to see it go break it and then go back up to retest the trend line that it broke. So here it didn't quite get all the way up there to the trend line, but it got very close to it. So there's a couple ways that you can trade this pattern. Either some traders will actually buy the break. Some breakout traders will do that. So when this trend line breaks, they will short this. Or there's another way that I believe is the safest way to do it. Is if you wait for the break, then wait for the retest of the break or close to that line, and then you can actually short or sell right here. See? Close to this breakout line. And then right after that, we can set our target. So the target is going to be the opening, the length of the opening of this wedge. Okay, see right here, from the top to the bottom. And then we're going to put it right where it broke down. So right here where it broke, we got our target, which is going to be right here. It actually overperformed and it went even lower than that, but as always, you want to take profits while they're there, because the market could actually reverse after that, which actually did a little bit. It tried to reverse here, but it wasn't able to fully, so it kept dumping down. That will be your target for this pattern right here. Now, the difference with wedges and triangles that we're going to see later is that wedges usually take longer to develop over weeks. This is actually a weekly chart. So it was actually from August 1st up until the break of January 2nd. See, a few months over here. Now, let's take a look at a falling wedge. Now, same thing, just in reverse. Okay, so the price was in a downtrend. You can see it right here. And then we got 1, 2, 3 touches on it. And then we got on the top 1, 2 touches, and then what happened on the third touch? It broke up. Right, went all the way over here. Now, how do we get the price target again? We calculate the opening, see where it breaks out, and this is going to be our target right here. See, it overperformed again on this one, this specific pattern. But again, you want to take profits whenever they're there. So this could be a good place to take profits. Okay. Now, so you can see there's 2 very easy to spot reversal patterns. Now we can go over to the triangles. There's 3 different triangles. There's the symmetrical, descending, and ascending triangles. So we're going to go here, MS. For right here. daily. Here. Okay, let's start with the descending triangle. Now, descending triangle, it's going to be a bearish pattern. Okay, it mostly appears on the top of a move like here. See, we got the uptrend coming in right here. And then once again, we got 2 points that we found. This one and this one. We draw a straight bottom, flat line. That's what you always have, a flat on the bottom. Here it tried to break out, but it was a fake breakout, so it's only a wick. It actually went all the way back up in the price. And then you see the price declining, so it's failing to make higher highs every time. Here and here. We got 3 touches. We draw a straight line from there. You see how it's a descending, falling line, trend line right here. So that's what gives you this shape that you're looking for with a flat bottom and a descending line coming from the top. So after we get our 3 touches, see how right on after the third, you broke down after that. In the same way we look for targets here, we're going to go from the opening, from the bottom of the opening to the top of the opening. I'm going to measure it from the breakout point right here. This will be our target right here. See? That's where you can take profits. So all this triangles and wedges, you calculate them by the opening. We can calculate the targets. Okay. Now we're going to look at the next. We have it right here. This way. So this one is the opposite. So this is an ascending triangle. As you can see, we actually get a flat top on the top, right here. And then we have an ascending trend line. Okay, so it keeps making higher lows. Right here, we got the low, and then we keep making higher lows, higher lows, higher lows. Okay, so it's failing to actually dump, to go lower. Price keeps rising up, and we have our flat top that we're looking for here. Okay, so you can call this would be like an inverse descending triangle. So it looks the same, but the opposite way. And we're going to measure the opening of this again, from the bottom to the top, and then right where it breaks, right here, it's going to be our target area, which hit perfectly, right in there, and the price is dumped. So I'm telling you, sometimes this patterns will overperform. Okay, that's very good. It could happen, but you always want to be prepared because this right here could happen next, and it would not overperform, and it will hit your target, or sometimes it goes a little bit under the target, and you want to be able to take profits right where they are, because maybe the markets will actually turn around and dump all the way back down to where they were. Okay. Now there's also one more from the triangles, which is called a symmetrical triangle. Okay. This ones usually are continuation patterns. Okay, I'm going to look for one right now. So if it's a downtrend that is happening, and then we'll see the symmetrical triangle, you want to expect that it will most likely continue the dump, just like here. See how it looks symmetrical on both sides? Just like that. So you got a downtrend coming in, coming down. And then we have a consolidation period right here. You consolidated the shape of a triangle, symmetrical triangle. And what you're expecting is, again, we got the touches, at least 2 touches to form a trend line, and then we have a third touch that happens. You can see it right there. We got 1 on the top, 2, 3. Once again, bottom. 1, 2, 3. Then we broke down after that. Now, once again, we're going to test this. We're going to measure the opening of this triangle, measure it up where it breaks up, and right there will be a target. This will give you a take profit target right there. Okay. Also, here, it could be on the opposite side. So we could have an uptrend come in, and after the uptrend, you'll see it break up. Although you want to be ready, because it can actually break the other way and cause a reversal. Okay, so the symmetrical triangles can break either way. You remember that there's always probability in this game. There's nothing that's 100% sure while you're trading, but you want to be ready for either situation to happen. Okay, because you never know when the market, it'll turn around on you and it won't do what you believe it's going to do. So always be ready for either side to break, but know that each pattern could be either for a continuation pattern or for a reversal pattern.